Okay, welcome everyone. We'll start our lesson 4. Today lesson will go through our learning outcome 4. And as you know me, my name is Anjum Satar. And if you have any questions, please drop me email anjum@ukversity.co.uk. I'll try my best to get back to you as soon as possible. Just please we'll start. Until now, we discuss about consolidated financial statements. We learned in the previous lesson. Consolidated financial statements. We discuss about statement of comprehensive income. We discussed about statement of cash flow. We discuss about statement of financial position. And we discuss about in the previous lesson ethics. We discuss about various standards. We learn about IAS 1 International Accounting Standard 1. Preparation and presentation of the financial statement. We discuss IAS 16 property plant equipment. We discuss about IAS 10, which is accounting standard events, about adjusting events, and we discuss IAS 7, which is about cash flow statement. We discuss about the IAS 2, which is about inventories, revaluation of inventories, and we discuss about IAS 36, IAS 37, impairment, goodwill. Those we discussed in the previous lesson. So today lesson will be focused about our LO4, which is be able to interpret financial statement and make justified recommendation for business stakeholders. We all know stakeholders. What is meant by stakeholders mean anyone who has any interest in a business. It's called stakeholders. So stake mean interest. So when we call stakes mean interest. So what stake you have, what interest you have. So different stakeholders have a different. They stakeholders not mean is the investor only. Shareholders also stakeholders, but not all the stakeholders are the shareholders. So it can be anyone who has any interest or their interest influence due to the action or the policies of the company. That's called stakeholder. Even the generation will come after us is also stakeholders. Okay, so today's lesson will be key focus about performance and stakeholders. Financial statement consolidated, we had a discussion, and today's lesson will be about financial ratios, application of various ISCs and IFRS, and key focus will be on the financial statement interpretation of financial ratio. Okay. When interpreting the financial statement, it's important we can ascertain who are the user of the account and what information they are needing. Shareholders and the potential investors primarily concerned receiving the adequate return on theirs. So shareholders really interested in dividend. What is a dividend? Dividend is a return on their investment. Return on their investment. So it's quite good, please, if you want to look around different companies' financial statements. So what we can do, I'll quickly show you. So any company of your choice, hope you already used before Yahoo Finance. Yeah. So you can find any company of your choice and you can look around any index. With the index 100, first scores are 250. Let's say I'll show you. And you can find it, your choice. Let's say we try to find Amazon.com, and you will see here Amazon. The summary and beta is called risk factor. Always it's good to look around 5-year beta is 1.16, and EPS, earning per share, is 1.91. You can compare with other companies' performance as well. And to hide the beta, hide the return, and its beta represents the risk factor. Okay, so if you want to look around statistics like the share values in different, so you can find it number of years trends. Historical data, you can look around as well. So you will see the share price, start and close. Financial statements, you can look around, please. Here you can see the income statement and balance sheet. You will see the gross profit, what's happened is different years, last 3 years. You will see balance sheet, what's happened, current, non-current asset, equity figures. So you can compare, and these are the figures we can use to calculate the ratios. And some ratios already calculated analysis. You can look around here, what's happened. Yeah? All the information we have, and you can interpret, and sustainability and other reports you can find about the companies as well. So that's quite good to look around any company of your choice. You can find eBay, you can find any other company of your choice. Okay, let's move to back to our slides. Any question if you have, please feel free and ask. Okay, so we said financial statement, user of financial statement, financial institution, implies potential advisors, investors, financial journalists, and commentators, all the required information. Okay, ratios. Ratios are simply calculation based upon the interaction in set of data. It can be two numbers. We can divide and we can calculate the relationship between these two numbers. So we can look around, the sales are directly linked to the changes in the sale activity. Changes in the sale activities also affect on the wages and the salaries and receivables and inventories. The ratios allow us to, these actions are simple or concise format, which will go through different ratios, and ratios are limited use on its own. For following point, we should need to be look around, interpret the ratios, can be varies industry to industry. Okay, according to, of course, different books slightly maybe categorized into 5 or 6, but major we can categorize ratios into 4. Liquidity ratio, liquid anything near to cash or cash itself, which we can convert into a short-term commitment meeting, that's called liquidity ratio, current asset divided by current liabilities. 2 formulas we'll use, current asset divided by current liability, under is other is the quick ratio, asset test ratio, current asset minus inventory, because inventory stock sometimes is less liquid, maybe outdated, like if you have a Windows 98 CDs, those maybe people not interested in those, and that can create a problem. So what we can do, we can look around the liquidity ratios. Then profitability. Profitability mean which we can look around the profit we have, it can go up and down. We can look around the various ratios and the profitabilities in a minute. And financial position, also known as gearing ratio, high gear, high risk. So these also represent the risk ratios, which is, if these ratios come high, it's mean high risk of the company. Okay, use of resources, also known as efficiency ratio, how efficient we are using the resources which we have. Maybe we have £1 million worth of asset, but if we can't convert into the profitability, no point. Yes, so we are not efficient company. So return on capital implied, profit from operation, which we can find the statement of financial statement of comprehensive income and divided by the total equity figures and non-current. Why non-current liability? Because the non-current liability, you borrow money for the long-term investment to buy the asset. That's why we add it, in the return on capital implied. Return on total asset, so you profit from operation divided by the total asset. Total asset always equal to total liability plus equity figures. So this means if you know total asset, you know your total equity and liability. Return on equity, equity mean is the share. So always we take the profit after tax, when dividend plays, that be careful. And these are all the formulas I'll give you. Separate formula sheet, gross profit. It's not a net profit. Gross mean how much you sell it, how much you purchase it. The difference is the gross profit divided by revenue. Revenue, turnover, and sales is the same thing. Just the revenue interchangeable. These words will carry on using. And then expense, revenue, percentage, how much revenue. If the revenue is going up, what percentage of the expenses are going up? It's going down. So we need to be look around the relationship as well. Operating profit divided by revenue, we can find the operating profit margin relationship within inventory turnover, inventory turnover in days, trade receivable, trade payable. Trade receivable should be lower, like a 30 days, 40 days, but the payable should be longer, like 90 days. So you have a safety net, which we call the cash you have always. Working capital cycle, we can find inventory turnover days, receivable days minus payable days. So that's which we can working capital cycle, and revenue divided by total asset. How many times revenue again the asset being, and we can look around asset turnover ratio. These are all the ratios we calculate. Anybody any question, please? Yes, no.
No. Oh, okay.
Okay, I'm okay.
Thank you. So please, we can interpret these ratios. When you do the ratios, always good to be take the 2 years ratios from the same company, or you compare with the competitors, like a similar company in the same sector. Of course, we can big supermarket and the small corner shop. We can't compare their ratios. There's no comparison. So we need to be look around the industry averages. We look around the information. Please, sometime maybe before COVID-19, ratios was absolutely fine if you make the decision based on the ratio. You always look around what is the current environment. So always we need to be look around what is the like analysis, political, economic, social, and technological environment at the moment now, because that's your future decision can be based on not just the ratios, because the ratios are the past thing, past information, historical information. That's give you, and it's not mean the past will be exactly the same future. It can be different or higher and lower performance. Return on capital employed, as we mentioned, each ratio's interpretation we need to be so return on capital employed, if we say it shows the relationship between the profit after tax and the total equity. If your number of shares increase, the return EPS and return on equity will drop. So we can look around as well. Gross profit margin as a percentage, and we can calculate. So okay, so always current ratios is 2 to 1. 2 pound worth of asset, 1 pound worth of liability is better. It's a very strong position. If it can be varies industry to industry, or some industries maybe less than 1, because they have more liabilities than compared to the current asset. And the current asset minus inventory, this is normally 1 to 1. 1 pound worth of asset, 1 pound worth of liabilities. So that can be the strong liquid position of the company. Okay, so this we can calculate all the cost sale divided by inventory turnover days. 365 days in a year we have operations, so we can find it turnover. Gearing, as we discussed earlier. Interest cover, how many times the interest or the finance cost, we use the word, which we pay to the company, the money we borrow, and how much is the profit they are. Well, lender is very interested in these, the ratios. Okay, let's please look, we have 2 companies. We have a separate handouts given our Moodle. We solve this. You can find more questions, which I'll show you at the end. Okay, so gross profit divided by sales are we call revenue. So Anika's gross profit is 45% and Papika's is 52.5%. So according to the gross profit margin, Papika's is performing better than Anika's. So these are 2 companies name. We just so we can say how much is their difference is a 7.5% is the difference between 2, which we'll go through in a minute. And operating profit is 9% for Anika and 11.5% is Papika. So you will see there the gross profit difference was 7, but the operating profit difference only left 2.5%. So that's which we can compare as well. Gearing ratio, you will see the gearing mean high gear, high risk. So high ratio, high risk. So the gearing, we use the two formula, debt divided by debt plus equity, or just we show the debt and equity relationship. So debt to equity ratio was 13.25 and debt divided by equity was 15.29. And but if you look, Papeka is 71% and 245%. So according to this, there is a profit difference is only 7%, but the risk difference is very huge. So you will see we don't want to be invest in the company which is a high risk. If there is a not high return is only the return is 7% difference, but the risk is more than 50% difference. For 7% higher profit or 2% net profit higher, so we don't want to take 50 plus percent is around 60% risk, so we don't want to, that's not a good, decision to be investing Papeka. And interest cover ratio is 11.6 times, but other is a 3 times, they have a profit higher than the finance cost, the interest they supposed to. If the 3.1 times profit drop in the next year, they can't afford it. So when we decide to lend the money as a lender, so yeah, maybe charge a high interest to the Papeka because that's a high risk company. And asset test ratio, which is 1.22 to 1. So they have £1.22 of asset against £1 of liability. Another is 0.6 pence of asset against £1 of liability. So is again, Anika is less risky than Papeka. Their liquidity ratio is better. So on the basis of this, you can decide which will go through. Company performance may be compared with the previous or the past result, which we can. Comparison, there is a no independent benchmark determine whether to choose in the company current year result. So yeah, always you interpret horizontal that try to be overcome the problem of vertical analysis. It is a common compare the company performance for a particular period, equivalent the company in the same period, and introduce the independent yardstick benchmark of the similar company and compare it the performance. Industry averages can be look around where we can say industry averages every pound, like in a hospitality industry, people can say they can earn 200% profit in the food business, but there is a competition increase, the profit margin is dropping huge because people are switching. So you have to decide, so you have to decide, that's, need to be look around. Okay, any question from anyone?
No question.
No.
Then we can according to this we can consider the strategy, what strategy you will be used, and the ratios maybe show the particular weakness, yes, in a company, the business plan to deal with these weaknesses, impact of the decision. We often calculate the ratios in order to help decision about invest in lending, which we can decide. Okay, so we have a different stakeholders. Stakeholders mean anybody who has any investment in the company, that they have interest in the company. So we can look around the investors potential. They have different interests, always. When you decide and interpret the ratios, help you determine whether to hold or sell ability of the entities to pay the dividend or not. So on the basis of these ratios, we can interpret. Tax authorities, they interested, they would tax, right tax being paid to different stakeholders. So based on the analysis, which is 4.2, justify the recommendation on the statement integration. So gross profit Papeka is better, operating profit Papeka is better, gearing ratios Anika's is better, Anika's interest cover is better, asset test is better. So based on all these ratios, we have decided to invest in Anika instead of Papeka because Papeka is more risky company. And then according to this, you can choose for your assignment any companies and the ratios yourself, and then we can discuss it. Then we have 4M1, a merit criteria analyze the solution to the current issues in the financial reporting may affect interpretation of the key financial. So financial statement manipulation is the type of the accounting fraud that like Enron. Anyone heard about Enron? We know Enron.
Yeah. Yes.
Yes, sir.
Biggest scandal in the world. Yes, World Telecom, Enron, and we have recently Grillian Construction Company, 75 million is a fraud. So always you need to be think about these fraud. We have to draw the safeguard, and in the interpretation of the ratio, we always need to be not 100% relies on the ratio. Yes, the manipulation of the financial statement, commit fraud against the investor, which is carry on happening, cook the book. We know the creative accounting, so that's why we have a lot of these standards. Recently, IFRS 16, International Financial Reporting Standard 16 being released, for the corporate reporting. That's which we need to be look around. That is quite crucial because it's a lot of fraud carry on happening in the financial world, and you hope you've seen these companies which involve a lot of these frauds, and that's which we need to be consider them. Yes, Enron and all, not realize just these. So we have Enron scandal here in the slides, which is 75 billion. Yes, and world scandal, which we can look around the World Telecom. We can look around the American Insurance Group scandal. We can look around the Lehman Brothers scandal, and we have definition about creative accounting. Always we look, interpret these financial statements, and then you can decide, so look the internal control system in our organization, as well as the future strategies, reason for creative accounting, a lot of, cook the books. Yeah, so we need to be, these are all, extra points in the we can consider some ethical issues. Always we need to be considered to before making the decision, and always we look, the past political, economic, and social environment. Like at the moment, basic interest rate, which is around 5.5%, which is expecting it will come down, but lot of discussion going around. We can look around per capita income, per person income. When you investing, how much is it? It went down, went up. That's we need to be. And other than that, we always need to be look around what is happening in whole corporate world at the moment. Credit crunch, the credit crunch is really huge impact, on the company. So these are all the point, not just look the ratios, what is happening, like Brexit, the world, the conflict is happening. So these are, and then we can decide, where to invest in. These we can embed some real-time examples in our assignment as well, which we'll go through in next lesson, our assignment discussion. Any question, please?
No, I'm okay.
Thank you. And I quickly show you here, you have some handouts, please, if you want to go through some financial ratio handouts here. Yes, so please, if you want to, we have it's a template there. So that's we need to be. You can pick, example, and you have a Osborne and all other handouts as well. We have a sample assignment is available here, please, and that's also help you when you prepare your own. And next lesson we'll go through our assignment discussion, and we can pick, some examples as well. Okay, that's all from my end. If you have any questions, feel free to ask, and otherwise we'll keep up to here.
Yeah, okay. I think I've got a question. My question is based on the assignments.
Yeah.
Now, this assignment, okay, I understand that the question is there already. So, and the question is almost the same. And from what from the lecture, you are saying, okay, it means we pick our own questions to do with the distance. But I would like, is it also possible to also give us samples of questions that we can use to do the assignment?
Yeah, sure.
I think, sorry to say this, it's not on the distance, the corporate reporting per se, but my challenge is on the distance, the advanced tax. And I know because you are the same person taking the advanced tax as well, that's why I have to bring this up. That if it's possible to give questions, obviously, then we focus on the questions, because I know that obviously to have a question to contain everything, at times not that easy.
Yeah.
Yeah.
So what we'll do, if you look what we did, just one thing, I'll take you back, to our handouts, for each topic. So like here we have a handout here. It's just for the ratios. So our next lesson will be about assignment discussion. Yeah. So in assignment discussion, we'll give you the full questions. Yeah, where you can pick yourself which question you want to use it for it, because it's not an exam. Of course, we can do most of this. Really, the basic ratios well. If we don't know, then of course we can go through more in detail these questions, and we can say, oh, these ratios you do question, and we'll go through. Yeah. So what I'm going to give you, did I shared with you last lesson or previously, the handouts as well, financial reporting and other on WhatsApp group? No.
And I'm not sure you have. So maybe if you have, if you can, I mean,
You can repost it.
Post it back again, yeah, for it to see, yeah.
Yes, I think so. I shared with you ACCA, yes?
The last time, that one was on the chat, yes, when you had a discussion.
Yes, so
on WhatsApp.
I'm sharing you here. Yes, this is draw financial statement, all the accounting standard. In the chat box, you can download it, yes? And when all the topic which we cover until now, it's covered in this handouts, yeah? And other than that, I'm just sharing with you this normally we use for ATHE as well, and I'm going to share with you the ACCA one as well, which is we are doing basically this is quite relevant to our F6 exam, sorry, F7, which is financial reporting, because this unit is all about financial reporting, and of course within we'll go through the stakeholders and interpretation of the ratio. So I shared with you these two booklets, yes, with the question and answer. If you click those, you can download them and you can keep the copies, yes. And when we'll do the next lesson assignment discussion, and we can say, you can pick, from this book, this question, or from this chapter, you can pick it that question, the list of the questions. You can decide which one you want to. Underneath your interpretation is yours, or you think, come on, I have a lot of other examples of course, without referring to your client. If this is a public limited, no problem, we can. So keeping in view of GDPR, you can quote example as you want, no problem, because that's and of course ISAs and reference to, which we mentioned couple of it's quite good to be ACCA article, which is, yes. So you can say, let's say IES1, yes, let's assume, and say ACCA article, yes. So that's we can find it on different standard on article, just yes. And within our books we have article, that's on all the standards and their application of the standard. Of course, if we look the standard, we do the question, it's really, we can spend a lot of time on these, as even one standard it can be, yes. But we know the standard, and this is only assignment based course, so which we can go pick examples from. But if you think, oh, come on, I really wish to be learn that standard and application more, so we can go through more in detail those particular. If you think very let's say you never consolidated statement, but in the real world nowadays, of course, a lot of software is do things automatically, yes. We need a about interpretation of the information, yes. That's and we know the rules. If we know the rules, we can interpret the information and we can use it for, because a lot of discussion going around why we need to learn it, because the reason we need to learn it, because if you don't have a knowledge, you can't interpret like 2-to-1 ratio, the liquid ratio. What is 2? What is 1? 2 is the asset and 1 is the liability. So if you have that, that's a very strong 2-to-1 ratio, but under the liquidity ratio. So you can look around the benchmark and then you can interpret. Then maybe you can say, come on, this is not hard and fast rule like a list says. It can be 1 even can be good, because depends industry to industry, scenario to scenario, and you can compare accordingly. Okay.
Okay.
Any question?
Yeah, okay. Yeah, okay. So please
Okay.
try and post the link to the WhatsApp for us, please. The link of our
If you think
on the WhatsApp platform.
no, I shared with you in the chat box. Can you click the chat box now?
Hold on, let me see the chat box.
I shared with you all the
Yes, 4 different files.
yeah. So for these, handouts, yes. If you click it, you can download it, yes. And I'll share with you further if you.
David, if you are not getting it, I can send it to you. I've downloaded.
Okay, yeah, please can you send it to me through my listing, yeah.
I'll send it to you on WhatsApp. I'll do that.
Yes. Yeah. Okay.
That we are using it's called Kaplan Resources, Kaplan Resource Bank. So if you type in the Google, let's say you type in the Google search ratios, yes, and next to that, if you write the word Kaplan, Kaplan is a publisher, yeah. So you will find here the chapter of the books. And just 1 second, I'll share with you. And that's sometimes it's quite good for reference and finding some resources. Those will help you when we'll do assignment. Back to here. So if you Google it and say financial ratios, yes, interpretation of financial ratios, you will see here, yeah, it's called KF Knowledge Bank, which is mean Kaplan Knowledge Bank. So you can click those. You can find it, like if you want in your assignment, let's say you want this image, yes, types of ratio, you can take that, you can put in your assignment. Or if you want to think about, you want some examples from these, yes, like a data, right click it, take the image, and you can calculate yourself under these. You've been given here, yes, all the ratios, then underneath, yes, all the formulas, interpretation of ratios. So a lot of question can be like this to meet the learning outcome. Our learning outcome is like this. Today we discuss about the financial ratios, performance and stake. So that's you can see the financial ratios, yes, liquidities and all what is meant by. So there are plenty of examples we can, because it's just take the material, copy into your assignment, rewrite in your own words. That's the main thing.
Yep.
The reference. And sorry
for the interruption. If I heard it correct, so it means that if you pick the question which has already been solved, then you interpret the answer, not if the ratio may be like the consolidation, because some of the questions have already having their answers. So you can pick a question that has been solved, then you interpret the answers. Is it how you want us to go about it?
That's absolutely fine. Data you can collect it, yes. You can say, like such as consolidate. So you can snip it, take the picture of, and underneath you can say this company merged together, yes. So what is the group structure, or you can explain it, yeah.
Okay.
Like if you're doing consolidate, if you're doing ratios, you can say yes, that's the financial statement as given in. You can either put in the appendix as appendix 1, and you can say the gross profit margin 2022 and 3 went up this and that, yes, what this indicates, yes.
Okay.
Like today we discuss about Anika and Papika, yeah. And that's based on this, we can say Anika is better, and it's good to be invest in Anika instead of Papika, yeah. And then of course we can little draw the conclusion of your discussion. Yes, you're right, because it's just a matter of interpretation of things, and the pictures and the question, we can pick it even we've been given answers in the book. Or if you think, come on, I'll pick the question real company, you can as well. No harm, huh?
Okay. I think that makes okay. I understand now. Yeah.
Great. And the next lesson will be assignment discussion. So where we'll recap all the learning outcome, and we'll find where we can and how we can address it, how we can do the reference. Huh? And we uploaded up one sample assignment as well. That's quite good too. So here you can find that sample assignment on our page. So you can look around this one sample, because sometimes, because we are more practical, yes, in accounts. So it's a matter of, so you can, like, here is a little interpretation that's very basic, yeah. Different standard. You can even put the reference, yeah, where you got the information is about discussion about ethics, interest. This is one of, yeah. And someone, you will see here, they put the facts and figures, yeah. And then the company, the financial statement, and underneath they explain it, yeah. You will see there.
Yeah.
That's, interpretation of, and they use the reference. That technically is not Harvard reference. It should be access date and the cross reference within the text. I'll demonstrate during our assignment discussion session. Then you will see here, they pick the question and then they solve it and they demonstrate, yeah. And they and we can put the reference even where we picked it, the data, and then they did the cash flows, yeah, what is meant by, and had a discussion on operating, financing, investing, yes, activities. And then task 3, you will see there is a discussion about the ratios, yeah, gearing, and even they not calculated, should be calculated, whoever put the samples, yeah. But we can say financial ratios help to measure the performance, how many types of ratios. As example, the data has been included. Even in your task 2, whatever, or 3, you discuss 2, you mention the financial statement. From that, you can refer back, from that data, you can prepare the ratios as well, yes. You don't need to be again throw it, or you can new companies for task 3, you can as well. You put in appendix the data and you can calculate the ratio and show the performance. Okay, which I'll give you the template, you have a template, so you can fill the template of ratios and just underneath you can, like here, you will see here little template we uploaded, and sometimes some people use it, some don't. So that guy maybe hits the criteria but not merit criteria, yeah. So we can look around, like here you will see the ratios, yeah. You've been given all the formulas. We can write it company A or company B or E, so this we done for Tesco and Morrison. So you can, this is just demonstrated, so you can, all the formulas given, you can pick the data, divide it, yeah. You can fill it and throw into task 3. Underneath you can say what's happened here, performance, and you can and limitation operation. That's it. Done for task 3. Okay.
Right. Okay. Right.
Thank you. And
thank you.
Have a good weekend and speak you next week then. Thank you.
Thank you.
Okay. Thank you.
Bye-bye.
Bye.
Okay then. Bye. Bye.